Good morning, everyone. I'm Greg Faranello, head of U.S. Rates for AmeriVet Securities. Welcome to Monday Minutes. We hope everyone had a great weekend. Welcome to a very busy week ahead. A brief look back to last week, Chairman Powell, the Fed meeting. Obviously, a very stern message from the Fed regarding employment in terms of how he feels as though things should continue to improve in the next coming months, that the U6 rate is still likely to remain high. Many jobs will likely be lost permanently. In addition to that, obviously rates staying on hold until at least 2022. In his words, the Fed is not thinking about raising interest rates. Dallas Fed President Kaplan over the weekend reiterating that same tone with regard to job losses and basically a long road ahead. The markets have taken notice. Our weekly newsletter is out on LinkedIn. In addition to the AmeriVet website, we talk about volatility coming back into the marketplace here. A lot of speculation about retail driving this rally, Robinhood accounts, young millennials diving in here with certain names related to the crisis. We think there is probably some merit to that activity going on. But let's face it, when we look ahead here, we have equity valuations which have come back dramatically since the March 23rd bottom. Most of that has been driven, we feel, by the Fed, by the liquidity, in particular equity markets being driven by credit markets. So to take a pause here to see volatility come back into the marketplace makes perfect sense for us being at these levels. And at the same time, as we start the week over the weekend, we have new fears about coronavirus cases in China. Obviously, we've seen a spike in cases across the U.S., which we would expect as we continue to test more across the country. Having said that, this will be a key theme going forward for the market to watch in terms of the recovery. The administration is hopeful that we'll have a V-shape. The Fed is sounding a different tune. Short term, turning to this week, we have retail sales, we have another claims number, we have housing data, building permits, industrial production, Philly Fed. We've got announcements from the BOJ, from the Swiss National Bank. We have the Bank of England. In addition to that, we have Chairman Powell with his semi-annual testimony on Tuesday and Wednesday in front of the Senate and Congress. Last time he testified in February, there was a lot of discussion around SOFR LIBOR and that conversion, and the chairman himself has a letter out at the end of May speaking about that conversion to SOFR, so we expect that to potentially be a theme. In addition to that, obviously, like I said, Thursday we get another claims number, which will be closely watched as we follow up to the employment number that we just had, which was very constructive. In addition to that, we have continued Treasury purchases, which the chairman was clear would continue at its current pace. So call it $80 billion in Treasuries for the month, roughly $45 billion in mortgages, plus the reinvestment of principal, taking that to about $96 billion for the month through mid-July. And in addition to that, we'll also get short-end supply. We will get another 20-year, and we will also get 5-year tips. I'm Greg Faranello, and this is Monday Minutes.